Okay, so let's get started. We have almost 100 people joining us at the moment, and the numbers are going up. And I hope the connection holds. So we are joined today with today's speakers. I'd like to invite the panelists in the order that they appear to give a short introduction about themselves. Dr. Bei?
Yeah, I'm Do Guangbei, the president of CAFI, Renmin University of China.
Great, Dr. Mo?
Hello, I'm Xiuken Mo. I'm the head of the research at CAFI.
Hi, everyone. I'm David Porteous. I'm co-founder and chair at BFA, and I've had the pleasure of working with CAFI over the last few years on various projects.
Hello, I'm Evelyn Stark. I lead Metlife Foundation's financial health work globally.
Thank you. And I'm Jane Delcer. I'm also a senior consultant at BFA. I work with David. Okay. So before we start, I want to just share some information about the webinar itself. It's about 1 hour, and we will, you can post questions and comments during the session. If you just look at the bottom of your interface, there should be a Q&A button that you can press and introduce questions throughout the webinar. We'll try to answer the questions as they come in, but we will have a Q&A at the end of the presentation to engage the panelists and also take questions from you. Finally, we're recording the webinar, and we'll send you a copy of that link after the event. And I just want to run a poll to get a sense of who's joining us today. We have a large group now. We're about 135 people. So we're just running a poll. You should see that appear in front of your screen to ask who's in the audience and where you're from, a financial institution. Are you a policymaker? Do you come from a fintech company, funder, and the like? And we'll just give a few seconds to run that poll. Okay, I have about 65% of you voting. I'll just give it a few more seconds. Okay, we have about 70% of you voting and just sharing the results. So you can also see who's in the audience today. We have a pretty even mix, mostly drawing from researchers, but we also have funders and fintech companies and financial institutions. Thank you. Great. So let me pass the microphone then to Dr. Bei and Dr. Mo to share the presentation. If you'd like, you can indicate to me when you want to move to the next slide.
Thanks, Jane. Good evening, everybody. I appreciate to have this chance for sharing the major observations that we found out from a survey. We have a presentation slides, which is the summary of the report, diagnosis of the epidemic's impact on the financial health of the working class and the MSEs in China, and the policy recommendations. For the reason of time constraint, I'm going to provide a brief introduction to the slides, which will be available after the webinar if anyone wants to have it. So first of all, the background, as the slide shows. The outbreak of coronavirus has affected the life of hundreds of thousands of Chinese that might have a wider and long-lasting impact on the economy than SARS, which happened in 2003. The financial health of the already vulnerable wage earners and the MSEs in China became our concern. Whether they have the capability and the confidence to recover from the nationwide lockdown since January is the key to national economic recovery. CAFI was very lucky to launch this study with the support from the related companies such as Ant Financials, Baidu Financials, Credit Ease, Fujifu, a financial arm of Foxconn, Meituan, Dianping, and One Connect, and the China Ping An Group. To avoid direct contact, the survey and the interviews were conducted through internet in February 2020. We received 1,259 responses from 863 micro businesses and 396 wage earners, and interviewed 10 micro businesses. Next page, please. In terms of the samples of MSEs here, I need to explain a little more. Here, more than half of the MSEs employ fewer than 3 employees. Over 70% of the MSEs here hire fewer than 9 employees. 60% of the MSEs have monthly net income below 30,000 RMB, equivalent to 4,300 US dollars. That means they are real tiny micro businesses, different from that people talk about usually in China. Following the definition of a micro business by the National Bureau of Statistics of China, we found out the micro business support the likelihood of about the 2/3 households who usually belong to the lower income category. Wage earners we focus in this study are those of migrant workers from rural and very likely engaging in informal jobs. Next page, please. Now let me speak a little about the methodology we were using. The diagnosis analyzed the financial health of the samples of the MSEs and the wage earners. It covers diagnoses on their financial health amid the coronavirus outbreak from wide-ranging aspects, including income and spending management, debt management, emergency fund management, risk management, asset management, as well as future planning. 16 indicators across 4 dimensions were adopted. A score ranging from 0 to 10 is assigned to each indicator, with 6 being the passing score and 10 the best one. From the next page, you can see that the average financial health scores of the MSEs and the score distribution. So this study consists of 3 parts. Next page, please. One is a diagnosis of MSEs. Second, diagnosis of wage earners. And the third, policy recommendations. Jane, next page, please. This study consists of 3 parts. Yeah. We have made 18 diagnoses for the MSEs and the wage earners, 9 for each. And then based on the diagnosis, suggested 5 recommendations for policy consideration. Since I cannot go through the whole slides, what I want to do is to address the major findings from all these 18 diagnoses of the survey, focusing on the MSEs part. I consolidate them into 6 points as key findings. Next page, please. Number 1, which is the bad news. All micro businesses and wage earners experience an income shock. Most of micro businesses could only survive up to 3 months without a borrow. All of the business and households reported an income drop during January and February. About 1/3 lost their 70% income. The first 3 months after the epidemic broke out were critical to most of the businesses. The wage earners, on the other hand, tend to lack of financial plans for unexpected events. Nearly 60% had emergency funds for only 3 months of living. Only 20% had enough for more than 6 months. This is the number 1 key finding. Number 2 of key findings, which could be a good news. The epidemic's hit on the MSEs' confidence is not as devastated as we expected. Despite the inadequate cash savings and the weak emergency preparedness, the wage earners and the MSEs had relatively low debt ratios and were generally confident about the future. The wage earners were weak in managing their finances and assets, but thanks to the wide coverage of social insurance, their risks remained well under control. They generally stayed positive about their future employment status. Over 70% of businesses and wage earners are confident about the future. Risk of unemployment was not very high, and the wage earners were more optimistic than we think. Another 30% thought they might lower their living standards, but will now lose their jobs. Only 14% thought if they lost their current job, they might be forced out of the labor market. 61% scored 8 and above for confidence in family finances, and only 30% scored below 6. The optimism sends a positive signal towards the recovery of the national economy. Next page, please. Number 3 of major observations is online business showed its advantages during the crisis. 32% pure online businesses were not affected, and 10 of them even experienced an increase of net profit. Internet became the most useful tool amid the outbreak. Among all the internet tools, entertainment becomes the most popular category. Online shopping 23%, remote office and learning also play significant roles, 38%. So possible structural change in business model is widely expected. More than 30% will reduce business scale in the following 3 months. About 19% will turn to online business. Number 4 findings. Next page, please. Is weakness in finance assets and the risk management affects the financial health. About 46% of businesses realize the importance of liquidity management having gone through the epidemic. The coefficients of financial health index with business and wage earners are 0.617 and 0.604 respectively, and all significant at 1% level. One more thing is a lack of awareness on risk response mechanism, indicating huge market potential for inclusive insurance. However, only 21% wanted to enhance their anti-risk capacity through purchasing insurance products. A majority knew little about business insurance and thought their business was too small to be insured, which needed more cash instead. Potential for insurance products targeting MSEs are yet to be released, given the increasing awareness over the importance of insurance. Good financial behaviors are the key to securing financial health. It is discovered that good credit history, clear financial planning, and adequate insurance coverage prior to the outbreak are the keys to secure the financial health of MSEs. On the other hand, med and high-risk investments will put pressure on the businesses and harm their financial health.
Dr. Bay, before you move on to the next finding, we have a question from the audience from Curia. Yes, from Curia asking, what led to the increase in operating expenses for the MSEs?
Dr. Morgan, can you help me?
I'm sorry, your question is then how many costs increase?
The question was what led to the increase in operating expenses?
Okay, according to our research, it's about 30% increase.
And what was the cause of the increase?
When you mean the cost increase, I would like to say it's because compared to the incomes, because their income is decreased. So compared to that, we think it's about 10%. Actually, expenses is going down. Because in these times in China, we go through the spring festivals. Many businesses, they have a plan to stop their businesses over the New Year's. So, but this virus, when it's break out, and that means they take a longer holidays, so that their business is going down. So that is because it's about cost increase compared to their income.
Okay, thank you. So I understood that the level of activity was going down, which would increase their, decrease in income, but not necessarily adjust the cost relatively. Thank you. Shall we move to the next finding then, Dr. Bay?
Okay. Number 5 key findings is business digitization enabled higher accessibility to finance. Pure online businesses enjoyed higher accessibility to business loans, who were mainly served by digital financial platforms. Among all the pure online business, 47% chose to get a loan from online platforms, while the ratio is 30% in other business categories. Close to 50% of businesses prefer to borrow online from digital lenders. The reason could be that pure online businesses have accumulated a lot of personal and corporate behavioral data online, which allows the digital lending platforms to achieve speedy credit assessment and approval. Non-bank financial service providers were in a better position to serve the MSEs, particularly in the lockdown period. Digital and private bank lending services were more welcome by the MSEs, despite the higher interest costs. The MSEs were reluctant to borrow from banks due to the complicated process and the limited flexibility on loan terms, also because they lacked the bank acceptable collaterals and or standardized financial statements reports that the banks required. Okay, number 6. The last but not the least is that fiscal policies have played a larger role than financial policies during the outbreak. Preferential fiscal policies on tax subsidies, rent reduction, and the Social Security have helped reduce the operation costs of the MSEs effectively. Most of the surveyed businesses said the tax reduction and the exemption policy had a positive impact on their operations. As to the financial policies, most of the businesses surveyed online said they looked forward the most to the actual implementation of the loan maturity extension policy and the ease on the loan requirements for the MSEs. Okay, that's all the 6 key points for the major observations of the report. Now the next page is policy recommendations. I'm going to leave the,
yes.
Sorry?
We'll hold that for later. I have some more questions coming in that I'd like to ask while we have you here.
Okay.
So Stephanie is asking if you saw many of the MSEs reinvent themselves. Did they set up new businesses or look for new sources of income? If so, how many?
Dr. Moore. I will refer to Dr. Moore to answer these questions.
By now, it's because the research is in a very short time, and so. But when we have interviews to some of our business owners, most of them are very confident, and so they are not consider these will be. They consider their business will come back again. However, some of them also think about to move to others. As Dr. Bay already mentions that some of them, about 30% of them, consider going online. That's the major change.
Great, thank you. David was asking, an attendee David was asking if there are hidden variables linked to online presence that are driving these effects. For example, the level or sophistication of business management skills.
Let me say the question. It means there are some other variables that help them to recover.
I think this is a question that I was also asking myself, if there's something about their behavior about being online or the fact that they're already online that has an impact as to how they're performing? So is there something about their being online and their ability to manage the business better?
Yes, as we also mentioned there, generally speaking, those who have good financial health will cover better, or they feel more confidence about futures. So, but these we need further research to find if this is true or not, because we have one-shot surveys. So we need to collect more data or do some insights research on this. By now, so we have not very good data to answer that.
Thank you. And so one more question we have from some of these others that are coming in, I'll ask further down, but we have a question from Juan asking what percent of businesses are in the formal economy and therefore don't pay taxes?
The small companies, usually, and now we call the individual business, or some people just do the business very, very small. So they are not usually free from tax. So I don't have exactly the numbers, how many of them.
Okay, great. Thank you. So attendees, these other questions I'm definitely keeping an eye on, and we'll weave them into the rest of the conversation. Thank you for sending. So please keep submitting your questions. We're going to now save the policy recommendations for a little bit later. I want to thank Dr. Bay and Dr. Mo for sharing their insights and answering our questions. We'll continue to do that. Further down, I just want to also pass the mic to David Porteous, co-founder and chair of BFA Global, to share some of the work we're also doing on the COVID-19 response. David?
Thanks, Jen. And again, good morning, good afternoon, or good evening to all of you. Let me start by really commending our colleagues at CAFI for this research, because I think I've been very struck by how in at least this country, we get tons of public health data every day telling us about infection rates and death rates and hospital admission rates, but we see very little on the effects, the economic effects of this crisis. And as I think everyone's acknowledging, in many ways, it's even more an economic crisis as the responses to it now proliferate around the globe. So CAFI's agile research, getting out these findings, is very helpful, because all of us are in the position of entering the unknown here. And we hope that China, having gone into this earlier than most other countries, gives us some pointers to possible futures. So Jane, in the spirit of your webinar title of From Research to Action, let me just very briefly outline what we are doing at BFA Global. And it's really in 3 layers. There certainly is a research layer, and I'll mention that briefly. But then secondly, there's an implications layer. So what? What do you do about this research that you see coming in? And then thirdly, there's an application layer. Now, all of those I can just touch on very briefly today, because it's not the focus of this webinar, but there are others coming up where there'll be an opportunity to dig deeper for those who are interested. First, on the research layer, we have, encouraged and inspired by CAFI, also adopted some agile research. And in fact, some of you may have seen a blog out yesterday on the first results coming back from 7 countries, 5 emerging economies in which we work: Kenya, South Africa, Nigeria, Mexico, and India, as well as the US and the UK as kind of comparator countries. Now, what's interesting about that survey, and again, I can only just mention one thing here, you can find out more on the blog or in webinars, which will talk more about it, but similar to CAFI, it was an online survey, which does have an effect on the sampling, although also like CAFI, our concern was to target low and moderate income people in those countries. And in general, that checks out with the norms around minimum wages in the country. It's also a sample where in most of these countries, the effects are quite recent. So just as you heard CAFI did the survey in February, probably 1 month, maybe 6 weeks into China's taking measures around this, we're looking at the relatively early stage. But here's the big finding that I think matters for today. Big finding for us is that in all the emerging economies, Kenya, Nigeria, South Africa, Mexico, more than half of the respondents in this initial survey already reported either a significant or some decrease in their earnings as a result of this change. So if we're seeing that already this early on, then some of the things we've heard from CAFI today about the effects on MSEs and the 50% drop in many cases in their income, we're likely to see that pull through in these other countries as well. And that's something we need to look very carefully at. It's also interesting as a counterpart, what we heard from Dr. Bay, that despite this quite heavy knock quite early to low and moderate income people in these countries, confidence is surprisingly high. So for example, higher in some of these emerging economies about coming back again after the crisis than in the UK, where the government has taken all sorts of strong measures to support incomes and so on. And so I think this confidence factor is a very important part of thinking about the recovery. So that's just a little taste of the research layer, where we're saying what's going on out there, and we have to keep doing this in an agile way, and we hope to repeat the surveys. So some of the questions like, how are people reinventing themselves? Well, as we repeat the surveys, we hope to be able to get better answers to those questions over time. The so what layer, the implications layer, well, this is an environment of great complexity and great dynamism. Things are changing so fast. And so what we've decided to do is to embark on using technique we've used many times in the past, and that is scenario logic, simply to structure our thinking around possible outcomes to the crisis. And again, we're not public health experts. Our interest, like CAFI's, is the economic outcomes on the financial health of vulnerable people in particular. So we've started that exercise in Mexico with the help of the Metlife Foundation, Evelyn represents here today. And just to give you a taste of that, because you'll be able to hear much more, what we're starting to ask ourselves is to say, well, we've all been watching those bell curves around the epidemiology. We're talking about flattening curves and things in terms of infections. What does the curve look like for the economy? Is it a U, a V, or a W? So, for example, by V, what I mean is a fairly quick bounce back. And what China's information gives us is some hope that there would be a relatively quick recovery. That's the V. Whereas we might be looking at a U, where there's a much more pronounced trough lasting longer than small businesses or low and moderate income people's savings could possibly hold out, and even government measures can't reach. And of course, there is the W, the concept that this epidemic comes in waves that results in a stop-start economy, which in itself has implications. So we want to look at all of those and look at possible futures, not projecting this. We can't do that, but we can look at what the possible outcomes might be. And that helps us inform the third layer and the last layer, which is the applications. And so we hope that will inform stress testing at some of our financial sector clients, cooperatives in Mexico, for example, that need to prepare for a world that might look very different, even if it is in fact a V-type economic effect. Some things are changing. We know that today. And lastly, on the action side, just to give one example that's perhaps encouraged me, it comes from a fintech startup with whom our Catalyst Fund works in Africa. I won't mention their name because they'll choose when they wish to discuss this, but they have a value chain linkage to small grocery stores throughout parts of this country. And they've come up very quickly with the idea of digital food vouchers, which they can distribute to needy families in the neighborhoods of these stores, which these stores are able to accept and exchange for food very quickly as a way of supporting immediate livelihood. So to me, that's an example of moving to action coming out of the capability that these fintech companies had at the beginning. So let me pause there so we can go back to some of the implications from China.
Great, thank you so much, David. I'd like us to move into the Q&A, And there are also quite a few questions coming in to, I think, pull into the discussion. So I encourage us to keep asking questions and share between the panelists. And let me start with a few that are kind of coming together as a set of questions. Some of the audience are wanting to know how this approach can be replicated in other regions. For example, one of the audience members wants to know from the Middle East. We're also, from our point of view, thinking about how this applies to economies that maybe are not as developed, don't have as much digital or internet access. So I direct that to Dr. Bei, Dr. Mo, but by all means, if you other panelists have comments, please do add.
Yes, as I answers typing there's in China, the internet is well developed and the governments try very hard to help every village to access to the internet and also help them to develop an e-commerce. So, but there are also some have difficulties to access to the digital to the platforms, but the business, especially the retail business, are online. So people are very hard to rely on offline business to increase their incomes.
And Jane, maybe I could just add in terms of the approach we're taking. So I mentioned the online surveys that we've been doing like CAFI has, and the example we heard today. What we're doing for people who are not online, and this is the sample of the financial diary households in Kenya, is going to those households with phone calls, and that's happening right now. And so we hope that the results of that we can release in perhaps a week or two, and that'll give a sense of how these households that we've now tracked for more than 5 years in many cases are responding, where we have a better sense of continuity across them. But that's done by phone call because our field researchers just can't get out there right now.
Okay, great. And are you able to go more specifically, Dr. Bei or Dr. Mo and David, if you have anything to say, how it could be specifically applied, how this methodology can be more specifically applied in Africa? Any responses from you, Dr. Bei or Dr. Mo?
Sorry, I just mute. I add one more point. I think I like to stress the importance of the concept of financial health, which is useful. This time we use it as a measurement for analyzing the wage earners and MSEs. And I think it can be used in other countries as well. One more thing I like to say, for example, the one measurement is called cash reserve for emergency, either 2 months or 3 months. That's a very good indicator. I like to mention that, share with you, since this study was widely reported by the major media in China, and the briefing of the study was delivered to the government agencies, such as the PBOC, the central bank, and some other government organizations. So this indicator, I mean the capital reserve or cash reserve against the emergency for 2 months, 3 months, has been paid a lot of attention. As the vice chairman of NDRC in China wrote his comments on the briefing, he said, now 2 months already passed. We should pass this information to the top leader through our internal channel. You know, Right now in China, we go a little bit ahead. The 2 months passed, but we have another 1 month. That means the end of April. So otherwise, all those MSEs and vulnerable group will be very, very difficult if there is no new policy from government. You know what I mean? So anyway, I want to say the indicator of financial health is a very useful tool.
Absolutely. And that's a great segue to having someone like Evelyn as part of the discussion here today. So Evelyn, building on the notion of financial health and overall in the financial inclusion community that we're thinking about, you know, where does this all go? This seems like very timely. And I'd love to hear more about the global programs that the foundation and your work have been on financial health and what that means for how we're thinking about what we should be thinking about in the pandemic.
Great, thank you. And thank you so much to CAFI and BFA for the 2 pieces of research that we're talking about today, and especially what we're talking about in China. So we've been focused on financial health for a couple of years now. Just a segue from financial inclusion, basically looking at the more qualitative aspects of what that inclusion can actually do for us. And I think Dr. Bay is demonstrating its importance really well. As a foundation, we fund research and practice on what works in helping people increase their financial health. And again, I think what we're hearing is this resilience to shocks is a key piece of it, although I think very often in our industry, we would prefer to be on the opportunity side for growth and future planning, which is something that a lot of our work has been in as an industry. But I think, you know, the term unprecedented has been probably overused in this crisis, but it is indeed unprecedented. These ideas that we're hearing from China, folks having 3 months worth of savings, having low debt to income ratios, and having a strong social insurance are not things that we're seeing in many of our other markets. And so as a funder, I think it's really changing our focus on where we need to be in financial health. And some things that may have been more anathema for funders, things like focusing on immediate needs, giving actual cash and cash transfers to low-income people on this scale. I think we're more used to doing that after an earthquake or the tsunami. But this is just, again, unprecedented, and we need to figure out, and this is where I think this idea of understanding where the curve might be is very important. We need to figure out when we're ready to shift off of immediate needs and move back into that more medium and long-term planning, which is where funders and donors and probably governments work best in the development space. So those are some of the areas that we're thinking, and we want people to keep, again, that focus on financial health, which again tells us that we have to look at immediate needs and future. It's not all the same. So again, thank you so much for the research. This has been very illuminating.
Thank you, Evelyn. So we had some questions going to the more about just what the reactions have been by different players. I'd like to come back to thinking through the recommendations of different stakeholders, but the questions are burning a hole in my pocket, if that's the right expression, and I wanted to ask. For example, the study was talking about how almost half of the online businesses would use digital lenders. And I'm wondering if you saw digital lenders and platforms, what their response was, and if anything, were there lenders that were taking advantage of the situation and charging higher rates? This is to you, Dr. Bay or Dr. Mo.
Yeah, I think this is a very good time to demonstrate the digital finance importance and its a contribution to the emergency, particularly the crisis. People never meet such a large crisis. So, you know, all the banks closed down their outlets on the streets. So people cannot get cash, and even they are worried about the risk of get money from the ATM. But you know, there is a very advanced digital payment system in China. So people just sitting at home and do transfer their money and buy what they want from the supermarket, and all those delivery rider deliver their goods to the home. So you can see that once the crisis happened, the physical, you know, system doesn't work, but the online business and the digital financial service work very hard and contribute a lot. So after this crisis, I believe the government, particularly for the regulators, will take the serious and think about what the digital financial service in terms of its importance of the financial system. So it's a great chance for developing the digital financial service.
Have you seen any of the Chinese banks doing more for financial inclusion aside from just some of the financial changes in policy, like extending loan maturity? Have you seen them do anything beyond financial inclusion? There was already a national push, but have they been more actively involved? And to Evelyn's point, towards encouraging financial health?
Yes, that's true. We can see that news from the media. A lot of banks express their attitude to support these vulnerable MSEs people, particularly people in the Hubei, Wuhan city. But however, we also learn from MSEs the actual implementation of these financial policies are not so easy, since all those medium, particularly for the medium and the small-sized banks, they are also, you know, worried about their profit and revenue after the crisis. Okay, they consider the risk management is so urgent. So you can see that that's why we ask the policy recommendation. One of them is the fiscal policy is much more real and significant than financial policy.
Let's come back to that then. In terms of the recommendations that you see, I'm keeping my eye on the clock as well. I'd love to hear from all the panelists what you think the recommendations are for the stakeholders that you're targeting. So Dr. Bei and Dr. Mo, to hear the policy recommendations you were going to share. Evelyn, I know from the foundation side, we're not, the focus is not policy, but maybe hearing how you as a funder and other funders can approach this later down in the recovery phase. And David, from your side, having worked with you know, quite a bit on the policy, but also understanding the role of technology and digital platforms, I'd love to hear you share your recommendations for the audience today.
Well, we provide 5 points of recommendations, but I'm not going to go through the 5 points since it's a pure Chinese characteristics. So, but one thing I like to say is we suggest to take this framework of financial health as a part of a national strategy of financial inclusion, which we consider is very practical and very important. for a sustainable financial inclusion ecosystem. And we believe after this crisis, the government will take care of all those indicators. So this is one of the policy recommendations. And one more thing is, as far as the extension of loan, it's maybe it's too Chinese. It's since it's based on the regulation here, the banks cannot provide a business loan to MSEs more than 1 year. That means the only 1 year maturity. So it's a short-term lending. But this time, people can find out if it's a short-term, they cannot fight against the lockdown period. So people ask for extension the terms. But this requirement can be a long-term impact. So the regulator, the thinking about the short term is not so realistic, particularly for the MSEs. They need to handle their fluctuation of income expanding. So probably this policy can be a long-term policy, implying to regulation. Now is in the discussion process, which is called internet lending by commercial banks. This is a new regulation, is just provided for public discussion.
David, would
Dr. Moore, you may add something?
Mm-hmm.
Okay. Yes. Yes. In policy, in terms of policies, we also it's on PPTs that physical policy may recommend for the short runs, but in the long runs, you need to consider the financial policies. This is the one thing, and the other we would like to remind is in China here for the MSEs 3 months is very critical times. If your policies cannot control the virus within 3 months, that means for the MSE, that will be very hard for them. That's all. Thank you.
Thank you. Anything to add from you, David or Evelyn?
Well, Jane, just to say, thinking from the financial economic point of view, obviously policymakers are in a kind of triage state of having to think very quickly and act very quickly. And often when that happens, some of the existing biases are confirmed. For example, a bias to preserve the big financial institutions, which happened during the financial crisis, the last time which financial systems were under this degree of stress, more than 10 years ago. So my plea, if you like, on the policy side to financial policymakers would be two things. The first is, in this time of triage, first of all, remember capillarity, by which I mean, remember the reach of the financial system, that to get to rural, vulnerable, poor people takes more than just big banks. They don't get there by and large right now. It takes smaller financial institutions like cooperatives. So in the liquidity packages and measures that you're thinking about, please consider those institutions, because capillarity matters at a time like this. And the second thing is, innovation also matters at a time like this. So there's again a big danger that we go back to what we know as we triage, but we lose the benefit of some of these new waves of things that are happening. And of course, it may seem like it's a luxury to have fintech innovation at this time. I don't think it is. And I think this is the time when we should be asking to condition the triage that's going on. What should the world look like beyond this so it looks better than it does today? And that involves some of these innovations being brought in and not allowed to wither on the vine. So I would say capillarity matters for economic policy and financial policy right now, and innovation matters and needs to be weighted into the triage formulae which are being put together right now.
Thank you. Evelyn, anything to add here?
Yeah, I think funders are in a slightly different position, but echoing what both Dr. Bay and David have said, is we do have the opportunity to be creative. We do have the opportunity to take our rules and regs and put them aside at this time and say, this is the opportunity for our partners to have the flexibility to change the way a funder requires them to deliver on projects in order to make sure that we aren't dropping out the most vulnerable of our partners and of their customers. And I think it's a real risk that we run if we do just go with the biggest players. So I have nothing to add other than basically what you've said applies to funders as well as others.
Thank you. I'm just sharing this, keeping my eye on the clock, but I'm also sharing this cover that came out in our discussions. I hope you're all seeing it. I thought it was pretty remarkable. And I think many of you are also just experiencing the role of how your life is changing and the role of delivery workers, gig workers that are closing basic needs as a result of sheltering in. And so my question to everyone as we're getting closer to wrapping up and trying to address some of the nuances of questions that were coming in is, how do we see being able to still reach and access low income, last mile, less digital populations to survey, to service them, and do platforms have a role to play here? What are your thoughts?
Well, Jane, maybe just one thought from me, and that is that there's been a lot of discussion about the adequacy of safety nets for individuals and households at this time. I wonder if what we aren't seeing is new thinking about whether platforms, e-commerce platforms, gig platforms, and so on, aren't really safety nets for businesses, small businesses of certain sorts. And what I see is the beginnings of resetting the social compact, which has been so divisive about who are employees and who are not, who are contractors, who are dependent contractors in the middle. We see lots of signs of that starting to change as platforms bring in leave policies or sick leave policies in this country and elsewhere. And so I see that conversation being reset, and the role of platforms, in a sense, their capillarity for small businesses is unparalleled. And as Dr. Bay and Dr. Moore said, in China, you see a lot of the outcome will be pushing more small businesses to go digital, to be linked into these platforms. So their roles will be even more central than before. And we need to take that seriously, all the implications of that.
Thank you. Anything to add from you, Evelyn, or Dr. Bay, Dr. Mo? Okay. I'm keeping my eye on the clock here. So we did have a poll, but I'll ask you to answer that afterwards instead of carrying that out here. But one thing I'll point you to that you may be interested in is the dashboard where our survey results are available for you. It's a public-facing dashboard, and you can explore the different topics as they relate to impact to income, financial health, the use of financial services, and the difference for households versus businesses. So please visit that at BFA-Works/C19-Wave1. That's available now. And that'll also be included in the email that we'll send out with the webinar recording, a longer version of CAFI's research that also includes the wage earners. And the questions, I'm sorry, that I didn't get to pull in and answer today, we'll follow up and try to send that in an email response. I wish I could make more time. And the last thing I'll mention here is that if you are a funder, you may be interested in joining us on Friday for a closed conversation we're having with a deeper dive into the survey results as well as some of the findings from our financial diaries. So if you'd like to join that as a funder, please email us at finsalut@bfaglobal.com. So I'll wrap it up here. We're at the 3:30 mark, my time, and I want to thank Dr. Bay, Dr. Mo, Evelyn, and David Porteous for joining us today. For everyone who was part of this session as well, thank you so much. We'll be having additional webinars and following up with you But thank you for sharing your insights and being part of this important discussion today.